I have an underlying medical condition that makes me more at risk, right? I fall within one of the CDC's high risk categories. That employee may be entitled to reasonable accommodations under the ADA, which may include leave, altering their work schedule or work area, reassigning them, all sorts of different possibilities there. A couple of questions to pose. First, can my employee get unemployment if they refuse to come to work due to fears of contracting COVID-19? The answer to this one is probably not. However, if you have an employee who is saying, I can't come to work, or I don't want to come to work right now, what you really need to do is ask that employee the next question, which would be, why is it that you do not want to come to work right now? If it's merely just a fear of contracting COVID-19, that's probably not enough, and that person would not get unemployment. However, as we talked about, if they have an underlying health condition that maybe makes them more susceptible to developing serious health consequences if they were to contract COVID-19, then you may have to allow that employee to be off of work. But no, probably not going to get unemployment just because they're refusing to come to work. Next question here, can my employee get workers' compensation if they contract COVID-19? It's unclear in Indiana at this time. Certainly states around us are more clearly addressing this. For example, in Illinois, they're addressing this issue and saying, yes, you may be able to get workers' compensation if you contract COVID-19. I think it will be more likely and maybe easier to prove for some industries, for example, healthcare workers, right, who are treating patients with COVID-19. If that healthcare worker contracts COVID-19, they may have the ability to get workers' compensation in response to that. But otherwise, for other employees, it may be really difficult to track where they were exposed to COVID-19, whether it was in the workplace or somewhere else. Next slide, please, Matt. All right, let's talk briefly about employee absences due to COVID-19. First of all, it's really important right now to review your leave policies, your company's leave policies, and consider how those policies interplay with leave that employees are needing right now due to COVID-19 related reasons. Perhaps you're instituting furloughs. How do your leave policies apply to employees who are on furlough? Perhaps your business is closed right now because it's not deemed an essential business. So thinking about how your leave policies come into play with those business closures. Next, talk briefly about furlough and layoff and WARN Act issues. Many employers are still talking about furloughs and layoffs at this time, despite the PPP loans. Given that, some employers didn't get them or maybe had too many employees to apply for them. So we are certainly talking to employers every day who are still thinking through furloughs and layoffs. Important to know the difference quickly between a furlough and a layoff. A furlough is where you're placing employees off of work unpaid for some period of time, some defined period of time, perhaps on a work week basis, versus a layoff, you're actually terminating employment, right? Furlough, you're keeping somebody employed but off of work unpaid. Layoff, you're terminating employment. Important to keep it in mind that if you are furloughing a certain number of employees for long enough, or you are laying off a significant number, you may be running into issues with the WARN Act. The WARN Act requires employers who are engaging in those activities with respect to a certain number of employees, typically at least 50 employees who are involved, but more requirements there, to provide 60 days advance notice of that event. There is an exception under the WARN Act for when it's not reasonably foreseeable that a business is going to need to do these layoffs and furloughs, which may be in play right now, but certainly something to fully evaluate if you are furloughing or laying off a significant number of employees right now, as many employers we know are. I want to talk quickly about the Families First Coronavirus Response Act. This act went into effect on April 1st and essentially has two main paid sick or paid leave provisions. The first part of Families First is the Emergency Family and Medical Leave Expansion Act. It's a mouthful. Essentially, this is an extension of FMLA. It is another reason why an employee could take FMLA leave. However, this FMLA leave is different than other FMLA leave in that it is partially paid. Okay, so the reason an employee could take this leave is if their child's school or daycare is closed for COVID-19 related reasons. If that is the case, an employee can take up to 12 weeks off under this new type of leave and receive 2/3 of their pay, up to $200 a day and $10,000 total. The first 2 weeks of that leave is unpaid, and then the following 10 is paid. The first 2 weeks, an employee could choose to use other paid leave you have available, or the second type of leave under Families First, which is the Emergency Paid Sick Leave Act. This act provides for 2 weeks of paid leave when an employee needs to be absent for certain COVID-related reasons. That 2 weeks is paid at full pay if the reason for the leave relates to the employee themselves. For example, either they're subject to a local quarantine or isolation order, they've been advised to self-quarantine by a healthcare provider, or they're experiencing symptoms of coronavirus and seeking medical diagnosis. Now, the employee is also entitled to this paid leave at 2/3 of their pay if they need to care for someone else who is in one of these circumstances. Important to know that Families First applies to employers with fewer than 500 employees, as well as governmental entities. Next slide, please, Matt. Just a couple more things I want to mention under Families First. First one is that there is a small business exemption. If your business has fewer than 50 employees, you can seek an exemption, but only with respect to providing leave for an employee who needs to care for his or her son or daughter whose school or daycare is closed. Okay, so the small business exemption only applies to that reason for leave. And in addition, that employer is going to have to meet some pretty stringent requirements to explain why it is that they were unable to provide this leave, operationally and financially for an employee. Next, there's a healthcare provider exemption. Certain healthcare providers can be excluded by their employer from Families First. In addition, emergency responder exemptions. Similarly, the employer can decide that they're not going to grant this leave to certain emergency responders. And finally, I want to mention that there are tax credits available under Families First, such that an employer can receive a full tax credit for whatever wages are paid to employees under Families First. There's a full tax credit available against the employer's quarterly payroll tax obligations. And then if the amount paid for this leave exceeds those tax credits, there's a refund issued to the employer. So the employer is recouping this money eventually. Next slide, please, Matt. Okay, let's talk quickly about employee return to work issues. Again, you want to make sure you're following CDC and OSHA guidance on return to work. Both are putting out very valuable information for employers. Next, you want to make sure you're following federal and state executive guidance. The executive orders that the governor is issuing, as well as whatever may be issued by mayors, et cetera, following all of those different layers of guidance that are being provided. A couple of questions here. When should I allow employees to return to work post a positive COVID-19 test? What you're going to want to do is follow the CDC's guidance on home isolation and when that can end, okay? What can they ask employees who return to work? It is very broad in terms of what you can ask your employees. You can ask about symptoms, exposure, positive tests, social distancing, travel, all of those things. You can ask your employees who are returning to work. Can you require a doctor's note for return to work? Currently, the governor's executive order says, do not require a healthcare provider's note to validate the illness or return to work of employees sick with acute respiratory illness. The reasoning is that medical facilities, medical personnel are very busy handling sick patients, and they don't want to burden the health system by also requiring these doctor's notes. OSHA, CDC, EEOC, all similarly saying, please don't require a doctor's note at this time. Can I test all employees for COVID-19? The EEOC finally answered this question last week and said yes. COVID-19, an employee who has COVID-19 presents a direct threat to the health of others. And so the EEOC came out last week and said, yes, employers, you currently can be testing for COVID-19 and mandating testing. Final point here, what about antibody testing? I was on a very interesting call last week with an employer, not a client, a different employer who is doing some antibody testing of its employees. Fascinating area. I think we'll be hearing a lot more in the days to come. This employer was doing voluntary antibody testing. Unfortunately, this employer was located in Texas. Unfortunately, they were getting very low numbers in terms of employees testing positive for antibodies, but I think this is an area that we're going to hear a lot more about as we all start thinking more about returning employees to work. And with that, I will turn things over to my colleague, Bob Greising.
Thank you. Had to find my mute button. Sorry for the pause. I'm Bob Greising. I'm in our business group, do a lot of transactional work and a lot of advice to family held, closely held businesses. And for some reason over the past few weeks, we've been focusing on the COVID response and how we can help provide some guidance to business organizations, really of all kinds and all industries to respond to this. Next slide, Matt. My presentation is going to cover really three primary areas. The general key steps, we'll touch on a few things that are just of general interest that are implicated by what's going on. We're going to talk about some stimulus bill financing tools. And my focus is going to be on the Paycheck Protection Program. And then my colleague Corbin's going to talk about the EIDL. So some of the things that we're seeing come up quite a bit is a number of topics and concepts that are really sort of historical in many ways, but are particularly triggered by this. One of those is a force majeure clause. You'll find probably in many of your supply agreements or other types of agreements, a clause that says, if something bad happens and it's out of our control, often called an act of God, we are permitted to delay or postpone or abandon our responsibilities under the agreement. If we're a supplier and we lose the hurricane comes through and shuts down our plant, we are forgiven and allowed to let that plant come back online before we are in default. And that is certainly triggered here. COVID-19 is certainly considered that. We're providing a lot of guidance to clients about what it means. A key question is whether or not you are out of, you give up the agreement itself, or you're just delayed until this ends, and then you have a chance to ramp back up. But take a look at your agreements. You'll find it in sort of the miscellaneous boilerplate provisions for that. A parallel concept that I list out here is called MAC or MAE, Material Adverse Change or Material Adverse Effect. These you don't find quite as often in agreements, but it's of a similar concept that because a material adverse event has occurred, I now have caused a potential issue under my agreement. If you're in a transaction, for example, or if you're in a loan agreement, you might take a look and see if a material adverse change is a trigger event, either a condition to an obligation or possibly even an event of default on that. And that ties into your financing considerations. With the circumstances we're all facing, there's a good chance that you are in a different economic position than you were. So if your financing documents have financial covenants, for example, where you are supposed to maintain certain levels of debt coverage or liquidity and so on, that may very well be challenged in these circumstances. And so we would encourage you to look there. You may find it under inventive default as well. And also another concept in the default area, that there are sometimes provisions in loan agreements where the lender itself just, it's called an insecurity clause. The lender feels insecure, is uncertain about the ability of the borrower to repay. You don't find those as much, but they still show up pretty regularly in loan documents. So check those. And the key here is to communicate with your lenders. They're going to generally, we have found that they are being understanding and trying to allow some postponement of key dates or waiver of financial covenants for a period of time. But once you are in default, it is harder for them to adjust. So doing it in advance is important. The next one focuses on fiduciary duties and decision-making. We have responsibilities as people that are running businesses or organizations generally to make good decisions. And part of that decision-making is making sure that you're receiving good information. So now is an important time to make sure that you are gathering information, that you're gathering it from the right people, that may be outside professional advisors. You want to make sure you're getting this from people internally, that if you have programs similar to some of the ones that Amy talked about, that you make sure that they're being followed. There was a recent case called Caremark a couple years ago where the board was found responsible because they failed to monitor their compliance program. That was in the healthcare industry, so heavy compliance issues, but the same concepts can apply here as well. And if you do gather this information, you make a decision, you should have good protection. Indiana is really good about protecting its directors. They use a reasonable business judgment standard, and you need to really ignore that before you would have liability. Cybersecurity is a particularly important concept here, particularly with some of the work at home arrangements, different issues on system integrity, firewalls. You got to make sure that you have the best things in place as you can. Very different and more difficult in these circumstances, but that's a topic that we're helping people on. And then insurance coverages, we can spend a lot of time on this as well, but look at your policies. If you have a business interruption policy, take a look at it, make a claim, be assertive with it, be aggressive, don't take no for an answer. You may have seen some newspaper coverage that there are a number of lawsuits out there already about denial of coverage for business interruption. We're not sure where it's going to go, but if you don't make your claim in a timely manner, you'll lose the opportunity to seek coverage under that policy. Next slide, please. So the Paycheck Protection Program and a couple of others. There's a lot of money involved. This is probably not news to you, but recently expanded this for the PPP up to $659 billion. Sounds like a lot of money, but it's going fast. And we're not sure things open up Monday. I haven't heard reports on how quickly it has gone, but it's open until June 30 until the money is gone. And my guess is it's going to be gone well before that. Economic injury disaster loan, again, Corbin will talk about that, but that too was increased. For medium-sized businesses, the Main Street Business Loan Program is out there, also has a lot of money. And the exact structure of that is a little less clear right now. People have been focusing really on the small business programs. But again, beware and be patient. Next slide, please. So the Paycheck Protection Program is really focusing on small businesses, and that is defined in a number of different ways. And we'll get into that in a little bit about eligibility. It is also coordinates with other stimulus programs and other acts that have been adopted. So there is close coordination with the EIDL. The Main Street program is there, and if you're eligible for one, you might be eligible for the other, but you might not be able to do both. And then some of the acts that Amy talked about as well. There are ways in which these interact with each other to help assure that you're trying to help the businesses once, but not necessarily twice. So some of the benefits that are available under that program, if you take those, then you're going to not necessarily be quite as eligible for the other programs. And also the dollars in these programs are first come, first served. So if you're not in line, you better get in line, and we'll talk about that a little bit as well. Next slide, please. So are you eligible? Can you even get the money? Some of you may have already submitted your application. You may already have your money. We'll talk about some of that in a little bit. But you have to be a small business. And the way in which they measure this is generally using an employee cap, a head count that's there. And this counts basically every W-2 recipient, full-time or part-time. It does not include independent contractors. The policy decision was that they can apply for these dollars themselves, and so they are not. It's not appropriate to include them with an employer as part of the payroll that can get covered. And this headcount is determined with a concept called affiliation. That if you are related to a company through ownership control or managerial control or other sort of concentrations of interest, there's a chance that you'll be considered affiliated. And that means that you count your employees and you count their employees of all of your affiliates. This is actually one of the highlights, news headline highlights in a negative way for like the Shake Shack and Ruth's Chris, because there were some carve-outs on this headcount limit. And one of those was the hospitality industry, restaurants and hotels. And so they were able to navigate this a little bit differently. And there may be some nonprofit religious organizations. There's also too an alleviation of the affiliation rules for those. But in general, if you're part of an economic cluster of interest, there's a good chance that you will be considered affiliated, and you need to add up all of the employees for that. And then the necessity thing, I'll do that. You need to certify that these funds are necessary for your business. Next slide, please. And this also has come up in the last sort of headline type of scenario as the parties that I mentioned, Shake Shack, Ruth's Chris, they've returned the money, and you're seeing a number of new guidance that has come out over the past week or so that talks about the need for the applicant to have certified that the funds that they are seeking are necessary for the business. And so what does that really mean? At the time that this was happening, and people that were putting in these applications now, 3 weeks ago, there was a lot of uncertainty. And so was it necessary? In their mind, they submitted the application, they made the certification. But now on hindsight, the SBA through its guidance is saying, you better take a look at that again. One of the keys here is that if you are rethinking this, you have until May 7th as sort of a safe harbor for you to send the money back. And you will then have been deemed to have made that certification in good faith. And if you don't, then you are at risk, and they're rattling the saber about their enforcement powers, and those are real, and they're going to be exercised. And there will be audits to try to determine that. So they will audit if your head count was right. They will audit if you were able in good faith to make the certification that these amounts were necessary for your business. And I put up here the slide, and this comes from the guidance. They are issuing frequently asked questions, and this is question number 31. Do I have to give the money back, basically? And so you need to make this good faith certification that it's necessary. And in doing that, you can consider your current business activity and I'll just quote it here, the ability to access other sources of liquidity sufficient to support their ongoing operations in a manner that is not significantly detrimental to the business. Over the past couple of days, I've been working with a number of clients, and two in particular I'll point out. One of them had lines of credit available to it. Was that then resources that are available to them, sources of liquidity? Another one had a big pile of cash. They just had some cash reserves that had built up. And the one is with all the cash, it's hard to say that they didn't have liquidity available to them. So they are returning the money. The one with the lines of credit, it's a little bit of a different question, some uncertainty. How long is that line of credit going to last? You know, the protection program lasts for 8 weeks. What's going on after that? So they are uncertain if they're going to do it. But if you have received your money, you need to think through this process and remember the May 7th target date. Next slide, please. So on the eligibility, we also are able to deal with sole proprietors and independent contractors. In many ways, the rules are the same, but they had to tweak it a little bit in this case because you measure payroll a little bit differently. So the particular features for sole proprietors are you have to have been in operation on February 15th, and you can then apply for the sole proprietor compensation, which you would take from last year's tax return, up to $100,000, and there's a $100,000 cap on any employee payroll cost. And so if you have employees, you take your sole proprietor's comp plus the employee payroll cost. And if you don't have employees, then you just do your 2019 net profit up to $100,000. And this is intended to recognize that there are a lot of people out there that are not in sort of normal corporate businesses, but are what is referred to as the gig economy. So what can you use it for? You can use it for payroll costs. And this is really sort of anything. And a number of questions we've gotten are dealing with like bonuses and so on, staying bonuses, you know, thank yous for working hard during this strange time. Those are all permitted, and it has to be at least 75% of the proceeds. You can also then use it for rent and utilities and interest on mortgages. They had to be in place by middle of February, but you can't use more than 25% of the proceeds for these purposes. And you can also use it on interest on debt that you had. Note that this amount is not forgivable. We'll talk about forgiveness a little bit in a moment. And then the interconnection with the EIDL is that you can also use them to refinance that indebtedness. Next slide, please. So what is forgiveness? You can seek forgiveness for certain permitted uses of the proceeds. And by forgiveness means it goes away. You don't have to repay that. It's not quite free money, but it's close to free money. And that would include the principal and interest on the loan. And you can also seek forgiveness for up to 8 weeks of payroll costs and these other permitted uses that are incurred in the 8 weeks after origination. And this is important, that you need to track when you receive the money, start the 8-week clock going, and then track the way in which those proceeds were used and be able to document this. You're going to seek forgiveness by applying and certifying to your lender that you used it for proper purposes, and they're going to ask for documentation on that. And so you need to have good and careful records, including payroll records. We've suggested that clients put the money into a separate account. If you've already had it put in your general account, it's not too late. But make sure you can track the way in which those proceeds were used. And as mentioned before, at least 75% has to be for payroll and not more than 25% for non-payroll. And if it's not forgiven, then it continues to be a loan outstanding. We'll talk a little bit about that as well. And the amount that is available for forgiveness can also be subject to reduction if you haven't followed the public policy purposes of maintaining headcount and maintaining wage base. And so if you reduce your headcount over this 8-week period, then you're going to reduce the amount that can be forgiven proportionally. And then once you do that, the second step is that if you have reduced wages by more than 25% of the prior base, then the amount of that reduction is also a dollar for dollar reduction in the amount that can be forgiven. So if you keep your employees and you keep paying them what you've been paying them, then you'll be able to get forgiveness subject to the way in which you've used the other proceeds overall. Next slide, please. So a couple key timeframes here. 8 weeks to incur forgivable costs. Then part of this is that 6 months of deferral from when you get the loan until your first payment is due. And then it's also payable 2 years after you incur it. It's up to a maximum of 2 years of maturity. So that's the program, and I'll be willing to talk about other questions that you may have. And now passing this on to Corbin.
All right, thanks, Bob. So my name is Lee. I am an associate in the firm's business acquisition and securities group. And also been one of the members and one of the attorneys in the firm, providing assistance to clients regarding our, the COVID-19 response. So next slide, please. All right, so in addition to the PPP loan program, another option that could be available is the Emergency Injury Disaster Loan Program. And so this program's actually been available for a while, but it's really not a product of the CARES Act, but it's rather a product of, but rather the CARES Act provides some much needed updates to address our current crisis. So traditionally, the EIDL program has been used as a way for the federal government to provide loans to businesses suffering from disasters. So things like, tornadoes, floods, or hurricanes, kind of like what we're seeing currently in the South. And each locality would generally apply, have their area be declared a disaster zone, and then the federal government would then approve their application and loans could begin to be dispersed. With the CARES Act, all states and their localities were actually just determined to have sufficient economic damage to qualify for the economic assistance. And this update actually opened the process tremendously for borrowers to apply. All right, so who's eligible? Similar to the PPP program, the standard is that it's a business concern with 500 or less employees. Those types of entities can apply. There are certain industries that are allowed more, and those are businesses in the hospitality and restaurant industry. One of the benefit of these loans is that they have very low interest rates, 3.75% for for-profit business and 2.75% for nonprofits. But like the PPP, the EIDL does not have loan forgiveness outside of the emergency advance grants, which we'll discuss about here shortly. But while there's not a forgiveness aspect, the EIDL provides a bit of a broader use for the funds than the so available funds. So under the CARES Act, Congress initially appropriated $10 billion. This has actually been increased to $20 billion as of last Friday. The term, this is businesses are able to apply for COVID-19 related disaster until December 31st, 2020. Next slide, please. All right, so unlike the PPP program, this loan is actually completed directly with the SBA, not an actual SBA lender. And you'll see here I've listed a link that you can go to submit your application. You'll see though, I put an asterisk here. So, Congress has appropriated additional funds to the program, but right before the presentation, I went to that website and unfortunately they are still not accepting additional applications. So we would anticipate that the online application portal will be available in the next few days for people to, put their, their applications in. But at this point, the SBA is still not currently accepting applications. All right, so some of the EIDL terms. The EIDL has a few different loan terms from the PPP. The first is the maximum amount that you're eligible to borrow. So under the PPP, Bob talked about that amount, and it's really driven by your payroll costs. Under the EIDL, that amount is actually that's actually granted to you is based on what the SBA determines is your economic harm that they believe your business has incurred. So the maximum amount that you're able to receive right now is $2 million. I would know that there has been quite a few discussions that this will be significantly reduced. There's nothing public out yet, but in speaking with representatives from the SBA, they had mentioned that maximum amount would be reduced. As I mentioned, the interest rate is 3.375% for businesses. Different from the payroll protection program, the term can be up to 30 years. And the way that this is determined is based on the company's ability to repay the loan. Some additional items that are different from the payroll protection program is that there is a collateral and personal guarantee requirement as well. The collateral requirement will be required if the loan is greater than $25,000. Collateral that would be used would be, the assets of the business, any land, any property that the business may own would be used as collateral. For personal guarantees, there was a provision in the CARES Act that actually waived any personal guarantees for loans under $200,000. So there's only going to be one required if the loan is in excess of that amount. And then also, similar to the Payroll Protection Program, the CARES Act also waived the requirement that you were able to find credit elsewhere. All right, next slide. Okay, so the final and probably most widely reported development from the CARES Act regarding the EIDL program are the emergency grants that are available. So these came out about because the SBA is the only entity that is processing the emergency injury disaster loans. So if you can imagine, the time from when applicants are actually applying to when they're actually receiving funds is taking quite a bit of time. And so this grant really is serving a purpose to immediately get funds in the hands of applicants to weather the time from the application to actually receiving the emergency injury disaster loan. So the total amount an applicant can receive under the emergency advance is $10,000. Since the CARES Act was passed, there has been additional guidance that actually limits the advance that you can receive to only $1,000 per employee, up to a total of $10,000. It's very simple to request the advance. All that is needed is you just check the box on the application. Once the application has been submitted, the applicant will receive the grant within days. And you'll see here I put days in quotations because CARES Act actually instructs the SBA to disperse the grant within 3 days. But due to the overwhelming applications the SBA has received, they have changed their guidance to days. So the number of days that is, we're not necessarily sure. But we've heard businesses that have received funds within the emergency grant funds within 5 to 10 days after the request was made. And then finally, the reason why the advance is so great is it's not a loan, it is a grant. So there is no requirement to pay it back. And actually the CARES Act went as far as saying that if you apply for the loan and are not approved, you receive the grant, you're still not required to pay it back. So obviously that's a really nice feature of the loan and creates another potential avenue for businesses to apply for relief. So with that, I think we have about 10 minutes or so we'll take any questions that you guys may have.
Feel free, if you would like to submit a question via the chat, you can do that and select that everyone receives that, and we will let our presenters know. If you want to remain anonymous, you can just send it to myself or Lexi, and we can share that information. And I do believe that several of you have submitted questions, so we're going to go ahead and Lexi's going to share those questions. It may be something that has been touched on in this presentation, but we'll go ahead and ask those if you guys want to elaborate at all. So Lexi, do you want to go ahead and I know I'll start. There is one that was shared and it's for everyone to see. So Amy, you might be able to see this too, if you hover down on the bottom of the screen. But it does say, Amy, can you say again what the name of the CDC guidance sheet was titled? And I just want to share that I will get those links to those specific guidance and documents from Amy and the Krieg DeVault team, and we will share that with all attendees with a copy of this webinar. But you can go ahead and mention that, Amy, if you'd like to do so, and then I'll get that information from you.
Sure. So the name of that CDC guidance that I mentioned is the Interim Guidance for Businesses and Employers to Plan and Respond to Coronavirus Disease 2019.
Lexi, do you want to go ahead and share some other questions? And while Lexi's sharing those questions, as long as we have time leading up to kind of our 11 a.m. Kind of wrap up time, we'll answer those. And if we run out of time, we'll share these questions with the team on here today. And as you see, there's their, on the slide that's up now is contact information. Feel free to jot that down and personally connect with them also. Lex?
Okay. I have a question that I received that says, are landlords required to notify other tenants if they have knowledge of a tenant who has contracted COVID-19?
I'll jump in on that one. I would say there is a general responsibility for a landlord to provide a safe and suitable tenancy, a place for this. And there may be specific requirements in the lease, and so that'll be to drive it generally. So take a look at what is there and what the responsibilities are for a safe rental space. And then I think after that, it becomes a little bit of a judgment call. You know, is it, you know, do you have an intimate office sharing where you have common space between everybody? Is it isolated buildings in an industrial park? You know, I think you would have to do this sort of under the circumstances. And there may be some issues. Amy may have some thoughts on this just from personal information. How did you get the information? How accurate is it? And if it's truly individual information, you'll have to be careful on what you disclose. But if you are aware of a COVID incident in your building, in your space, I think you ought to plan, at least have a plan in place for how you're going to handle that. But I lean towards letting the information out there.
Great. Thank you for answering that. Another question I have received is that Amy talked about overall testing, but I did want to ask if there are any concerns about employers doing basic health screenings as employees report to work. Things such as, do you have a cough? Do you feel sick? And require a temperature check.
Yeah, so all of those screening questions that you just mentioned are permitted. The EEOC, which enforces the Americans with Disabilities Act, has specifically come out and said, yes, employers, you can ask about symptoms of COVID-19 in talking to your employees. So certainly all of those questions are permitted. The EEOC has also said that you can check employees' temperatures, for example, every day when they come into the workplace. I know some employers are opting to have employees check their own temperatures at home and then certify when they come to work that they did not have a temperature. But yes, you can absolutely screen for all of those symptoms that you mentioned. And then it looks like we have another employment law question that I'll go ahead and address here that's in the chat. That says, if an employer recalls a worker and the worker states that he or she would rather draw unemployment insurance, what is the employer's next step? So what you will do is you're going to report this information to the Indiana Department of Workforce Development because you know, an employee who has work available to him or her, but is just, you know, saying I'd rather get unemployment than come to work, which is something that we're seeing right now, given the addition of the federal unemployment benefits that are being provided through the state. You, the employer, have a legal obligation to provide that information to the Department of Workforce Development. If you don't, then you, the employer, are committing unemployment fraud by allowing an employee to draw unemployment who you know is otherwise ineligible to draw unemployment. So you should be receiving information from the Department of Workforce Development about that employee's application for unemployment, and you'd want to then respond that there was work available to that employee. Whether you could get through if you were to call Workforce Development and raise this issue with them is another story, but I would say if you don't receive something from workforce development and you get a report that an employee has applied for or has sought unemployment benefits for a week in which you offered work to them, I would absolutely notify workforce development, in any way that you can, that there was work available to that employee so that you, the employer, aren't committing unemployment fraud.
Another question that is in the chat to everyone, you may have seen it. It says, do you anticipate any changes or additions to these programs once the states start to open up?
Well, as it relates to the Paycheck Protection Program, what I anticipate possibly happening is that they're going to run out of money. There's going to be a lot of political pressure to fund it again. But in terms of other changes to the program, I don't see that being impacted by opening up. In fact, I think it's going to be helped. It's going to minimize the need for funds available because you'll start generating some revenue. Certainly that's going to be a slow return, not going to be 100% of target, within the first week. Is that a month? Is it 6 months? Time will only tell. And I think that's the scary thing, which also links back to that whole necessary consideration that I mentioned earlier. But Amy or Corbin, I don't know if you anticipate anything in sort of the areas that you were focusing on.
No, so quickly on Families First, that provides paid sick leave through the end of 2020. I guess potentially what we could see is a similar law in the event that we're continuing to face similar issues in 2021, but obviously don't have enough information at this point to be able to predict that. But certainly Families First, that leave is available through the end of the year.
And thank you. Oh, sorry. Go ahead, Corbin.
No, you're fine. With the EIDL program, I don't anticipate any changes to that either with states, starting to open up. And I think independent of that, as time continues to go on, I think you're going to still look out for additional guidance and other things, in regards to the PPP program that the SBA might provide, because there might be some, changes in that regard.
One other too, we are seeing a bunch of local responses. Even, the city of Indianapolis has a small loan program. The state chamber has a small loan program. So there are responses outside of these programs, and I would expect that you would continue to see some of that happening.
And if you aren't aware, the Boone County Economic Development Corporation does have a small business loan program also. So you can go to their website for that.
Thanks, Diane. I forgot to mention Boone County.
That's okay. So there's lots of, kind of that's our role, is to make people aware of what's available, and then they can make the decision that's best for their business, with that. But a couple of things on that PPP, might have seen, Amy, I don't know if you want to answer this. Might be Corbin or Bob, but do you have to start paying employees on the day you receive PPP funds, or is there, a few days kind of grace period?
Yeah, first of all, these are, I'll take that, Amy. You may have some other things from your perspective, but I think it is more of a PPP program. The concept is that you have people that are employed, and so you have payroll responsibilities, and you can pay them in accordance with your payroll date. However, you can pay them on day one. Let's say that you've had a wage reduction and you want to restore that. You can certainly write them a check on day one or day two. But if you just start paying them and having those funds available in their ordinary payroll cycle, that seems to be fine. They have to be used within the 8 weeks. Otherwise, they're not eligible for forgiveness. They don't have to be used. It's just that they are not then eligible for forgiveness, and then you would have them for up to 2 years in a loan structure.
Thank you. And I received a question privately to me, so I want to share that. So Bob, did you say that the bonus can be used to add into the payroll funds for employees that have been working throughout this time?
Yes, the concept of payroll costs is very comprehensive. Salaries, wages, costs of retirement plans, health programs, and so on. And so the concept is that it can be whatever you would consider to be compensation. So a question that we've received several times, many times, is can I use it to pay a bonus? People have been working real hard. Maybe they have need. One of the other clients that I've talked with, they said, hey, we really had a strong first quarter. We usually pay our bonus at the end of the year. We're going to pay it now. And I would suggest that that's a payroll cost if you can justify it. Now, the caveat is that the SBA is going to be very concerned about improper uses of the funds. And if you are accelerating a payment which would otherwise not be eligible, then I'm not sure that it would be. This came through a professional services organization where there were distributions at the end of the year. Are those distributions of profits or are those compensation? So you have to be careful in how you do it. But if you are doing it for an employee and it's a bonus and it's a payroll cost and you're going to put it on their W-2 and so on, I think that you can do that, but just with a couple of the caveats that lawyers like to throw around.
I had received an email prior to the webinar, so I'm going to read those real fast. If you hear a beep, it's because my email is open as I'm reading these. So when employees are called back who were previously on unemployment, will unemployment make up the difference if their hours are reduced? And how does this affect the $600 additional pay per week?
Yeah, so an employee can still apply for and receive unemployment even if they're working a partial week. However, I am seeing situations where an employee is making, a sufficient amount of money or working a sufficient number of hours where there is no benefit then that they're eligible to receive through unemployment. So it really depends on how much that person is working and what their pay is as to whether there'll be any additional unemployment through the reduced hours or reduced pay.
Lexi, do you have any other questions?
I did have one come in privately. Sorry to interrupt you.
Nope, go ahead.
Where do you apply for the Main Street grant?
As of right now, that guidance is not out there. This is a program through the Treasury. It's a little bit different. And so the pathway to get there is unclear right now. I will acknowledge I haven't checked this week on what other new update is. I didn't see any in some things I was looking at. But it will come from the Department of the Treasury. I'm sure there will be a big announcement when it's there, and there'll be an application process. But at this point, I don't have great guidance. If we can get that person's name, I'll double check where we are and we can try to get that information.
So Amy, you might have some information. I know there's been some discussion, and today we talked about what employers can do, as in, those health questions or health screenings. Have you received any guidance on possibly what the CDC may require businesses to do? So kind of shifting that from allowing to really mandating. Are businesses going to be mandated to screen every employee before they enter the workplace? Kind of those guidelines.
Yeah, I think it remains to be seen. We don't have those directives yet from the CDC. What we have are recommendations from the CDC. The problem that I see, though, is if an employer is not following the guidance from the CDC that's being presented for workplaces in general or for specific industries, there is significant risk for that employer by not following the CDC guidance that's out there, even if it's not put out as mandatory. First being the OSHA requirement to create a safe workplace. And so if you, the employer, are not following the OSHA guidance, or I'm sorry, the CDC guidance for your industry, you could have a problem that you're not creating a safe workplace as required by OSHA. We also have concerns about third parties, making claims that, you didn't take these steps recommended by the CDC, and therefore you infected, my employees, third parties' employees, or third parties, third party vendor, et cetera, because you weren't taking, the steps required. Obviously, workers' comp claims as well. If the employer is not following the CDC guidance, it becomes more likely that there could be a workers' comp claim that's valid. So, so far we're not seeing, requirements. I think it's possible. We're not seeing requirements from the CDC, but, if you're not following that guidance, there's certainly a lot of risk. I think what we're more likely to see is requirements coming from the governor's executive orders for businesses saying, if here is who can reopen and here's what you have to do if you are going to reopen. This is changing daily, as you all know, in terms of the guidance coming out, and whether it's coming from the CDC, the piece that the White House put out about reopening America. I would, again, if you look at that piece that was issued about reopening America, the CDC's logo is up in the corner. So I would caution any business that, as you're making your plan for reopening, I would look at that piece put out by the White House about the phases that are expected in terms of reopening, and develop your plan for your business based on that White House guidance, as well as what's coming out from the state about reopening, and also checking OSHA and CDC's websites on reopening topics. There are a lot of great resources out there, and certainly, employers need to be developing, businesses need to be developing those plans right now for reopening. Issues like, are you going to take temperatures of employees when they come into the workplace? Are you going to, what is your stance going to be, or requirement going to be on social distancing? What about common areas? Which ones will be open? Which ones will be closed? What do you now have employees who need to take families first, but didn't before because your business was closed? So lots of planning issues, including personal protective equipment. Are you going to require face coverings, and who is going to provide those and pay for them? So just some of the issues that need to go into these plans that businesses should be creating now if they haven't already.
Thank you. I know that's such great importance, and it's ever evolving, and unfortunately we don't, have clarity on what those requirements might be, or when the actual reopening may begin. I mean, we've seen a couple little things, as is dental practices opening up as of Monday also. So, our role as a chamber is to really be proactive, and let our businesses have the information they need. We've really encouraged them, and will continue to provide resources to them. And that's why, I reached out to Rob. Definitely, we don't have all the answers, but we most certainly have wonderful chamber members that are experts, such as you, in your fields, that can connect those resources with our members. So we appreciate you sharing all that information with us. We look forward to Amy getting that information, and even if you want to send us kind of the correct link so we have that information. I know, I've reviewed kind of the governor's phase guidelines too, but I want to make sure that I have the most up-to-date information that we can pass along to our members. This is a great opportunity that we're looking at. We know the resources that are there now. Those may change and those funding amounts may change, but as Bob said, that they're in place, and those programs, maybe there'll be new programs or not, but most importantly, there may be additional funds. But what we want to do is plan the path to a strong recovery. Boone County is a great place to work and live, and coming together. And if we can help businesses really plan so they're ready to open strong for business and do things in the manner that is going to be best for them and their employees and clients, that's what we're looking forward to doing. We know that we have the opportunity to rebound stronger than ever. And so again, thank you so much for the time that you took out of your busy schedules. I encourage people on this call to reach out to Krieg DeVault team with specific questions. If you need help and guidance and working with them to make sure that your business is equipped to have a plan in place to rebound, I encourage you to utilize their services, and they are there, to help you all. So Rob, Amy, Corbin, and Bob, do you have? Was I muted the whole time?
No, just
Just at the end.
at the very end. Well, thanks very much. And we are here even 24/7 as needed to help you out. So our contact information is on that last screen. You'll see Rob around Zionsville and other places in Boone County, so you can catch him on the street if you want to as well. Rob, anything else from you?
No, you guys did great. So thank you, Diane, Lexi, and everyone else. Thanks, Bob, Amy, and Corbin too.
Thank you. Thank you for, again, all your assistance with today, but being, supportive of the community at large, and individuals that are nonprofit organizations. I encourage you to reach out to Rob if you need some guidance on how he was able to be instrumental in helping the Boys and Girls Club, with their loan application, if you're having any challenges with that. So, it's the governor's hashtag, but most certainly what we feel as Boone County as a whole, that, we are in this together, and together we will get through all of this also. Thank you. Have a great afternoon.
Thank you.
Everyone.
Thank
Bye.
you.